You want to be an active trader, but you don't want the pain of being a day trader. Well, I'm going to talk about what I consider the best overnight swing trading strategy for 2024. We're even going to use the whiteboard, so you'll know more than just what and why, but how to be successful. My Purple Max I algorithm has about a 100 trade track record. I've been tracking it since the beginning of July, and it's been available to the public since about the end of August. And in a few moments, I'll share with you how well it is doing, along with some other important statistics. So for those of you who are new to the channel, what we're doing is trading the overnight gap. Yeah, you've seen it. You've seen the market close at one point, and in the morning it is either up or down, and you're wondering, can you take advantage of this? And the answer is yes. I've shown this chart a lot because it is one of my favorites that really makes my point. The SPY, which is what the algorithm is based off of, started in 1993. And if you had bought the SPY in the morning and sold at the end of the trading day, you would be even or possibly have lost money by this point in time. However, if you had bought at the end of the trading day and sold it in the morning, well, then you would be up big. But more importantly, it means the action is overnight. There are a few important things to remember. This is a process, and we are trading, and during trading, quite often there are winners and there are losers. And what we're trying to do is be a winner as often as possible. And also understand that we need to improve our techniques through education and experience. So our ultimate goal is to maximize our gains and minimize our losses. So the overnight swing trade has three parts to it. Time, we buy at the end of the trading day, the last seconds before the market closes, and then we sell usually first thing in the morning. However, we may continue on if the market is going in our direction. Next, the signal. We use the SPY Tomorrow signal that's free, available to you on the front page of spytomorrow.com at the end of the trading day at 4 o'clock Eastern Standard Time. And members, of course, they can get that earlier, but you don't need to be a member in order to trade the SPY T trade, which is the style that we use, which is generally a ratio trade, generally 2 to 1. I'll get more into why and how we go about the SPY T trade in a few moments. The Purple Max I algorithm, with about 100 trades under its belt, is running at about 77% correct. Well, what does that mean? Well, these algorithms measure what we refer to as the pressure at the end of the trading day, which often correlates to how the market might open the next day. And we count that market opening as the first half hour of trading. So if we say the pressure is up, then we're saying the SPY will be up within the first half hour of the next trading day. So you may be asking yourself, is this some sort of mathematical trickery if you're giving yourself that first half hour to be correct? Because, hey, you've seen the market open up and then go down, or start down and then go up. And so if you average that in, would you be right more often than not? And there's a way to figure that out. And we've done exactly that. So over those last 100 trades that we were talking about, we reversed it. We said, okay, if it said the market pressure was up, then we pointed down. And by doing the opposite of what the algorithm said, well, it was only right 47% of the time. And you can ask yourself, what if we gave ourselves more time beyond a half hour? How often would it be correct? And the answer is well above 77% correct. I've seen it many times where the market went the right direction, maybe at 10:15 or 10:30 or even 11 o'clock. I would probably assume it'd be well over 80% correct if I had that kind of patience. It's important to note that the algorithms are calibrated to the ETF, Exchange Traded Fund, SPY, or the S&P 500. However, that doesn't mean that's what you should trade, because there's an important element, and that is volatility. And our SPY T trades, which I'll get into in a few moments, don't always work as well in low volatility, which is quite often true with many options strategies. Now, there are three main ETFs that I use. Of course, the SPY, because that is what the algorithms are based off of. But for a little more volatility, I'll use the QQQ. And I also like to use the IWM, which I've been using a lot during these very low volatility times. If you need more volatility, and I'll show you how much you need in a moment, but you can use any stock or ETF that you want, as long as it moves with the market, meaning generally, if the market is up, your ETF or stock is also up. Using a stock that's highly weighted in the SPY or the QQQ is good, such as Apple or Google or Tesla. But no matter what ETF or stock you use, you need to make sure it's highly traded so you can easily enter and exit your position. Before I show you exactly how I trade the ETFs, I want to go over some of the SPY-T trades. SPY, SPY, and T for tomorrow. We're spying on tomorrow, and that's why we call it a SPY-T trade. And generally, we use, again, SPY, QQQ, IWM. Again, I'll show you the volatility needed to really make this system work. But we have a variety of trades that we like to use, and they're ratio trades. We have the SPY-T-A, the SPY-T-B, SPY-T-C, SPY-T-D, SPY-T-S, but we also have variations within these trades, such as the SPY-T-BQ or the SPY-T-BT trade, which I've been using a lot lately, and I think I'm going to do a video on a little bit later. The concept behind the SPY-T ratio trade is that we have a hedge to protect ourselves. Yes, we're leaning in a specific direction for maximum gains. However, we have a hedge to protect ourselves. In case the market goes the opposite direction, we can minimize our losses. And at times, there are awesome days like I had yesterday where I gained on both my calls and my puts. But as always, you have to be careful of flat markets and, of course, that dreaded IV crush. So remembering that the algorithms are based off of the SPY, it's important to note that sometimes when the volatility is this low as it is right now, the SPY may not be a good SPY-T trade. It could be okay directional, but you really should make very small trades when you're going directional because you could lose a big portion of your trade if the mood of the market changes overnight, which is what can happen. The next morning, there could be economic news or earnings that just flip the mood of the market. Sometimes the pressure is, say, negative in the evening, but in the morning, there's not a lot of volume, and the bulls kind of push the market up, even though the overall pressure is probably still negative. So we end the day with a positive day, but with not much volume. There's so many things that can happen overnight. We just want to protect ourselves. But in protecting ourselves, we need that volatility. So we need at least a 0.3 to 0.5 volatility. In other words, quite often we'll see right now that the SPY may open at 0.2% or 0.3% or 0.1% or sometimes even flat. Even all of them can open up a little flat in the beginning and then work their way in a specific direction. The QQQ quite often will open 0.234%, and then the IWM often will see at 0.4, 5, 6%, even in these low volatility markets. So this is why I'll often use the IWM in situations like this. My first go-to is SPY when the market is highly volatile. And then when it starts calming down, I kind of gradually move over to the QQQ. And then times like these where everything is really flat, I tend to work with the IWM. But the IWM is a little bit more of a wild card than compared to the QQQ and SPY because the QQQ and SPY have many of the same weighted stocks like Apple and Google and Tesla. So they tend to work in the same direction where the IWM, not always, and sometimes will be down here and will be the opposite. It tends to work the same direction as the market as a whole, but again, not always. But because of that high volatility, we can still make money because of that volatility. We may see the IWM start off really low, and then we could sell our put and follow the call back up if it tends to follow the market the rest of the day. This often happens. It's very common, especially more so with the IWM than the other two, that I will sell at one direction and then watch it go down the other direction and sell either the call or put. But again, it can keep going. So we have to have some sort of an indicator, such as VWAP or maybe a moving average in the morning that we're going to follow, and maybe just follow the trend. So if it's up high and it's still high in your indicator, sell the put and follow that call higher to maximize your gains. So again, what we're trying to do with this ratio trade is maximize our gains, minimize our losses if the mood of the market changes overnight due to economic news or earnings or some sort of news that just flips the market the other direction. There are a lot of reasons and a lot of things that can happen overnight. So we want to be prepared, but we also want to have the right trade for the times. We don't want to keep trading SPY just because our algorithm is based off of SPY. Even if SPY is correct, we still lose money due to lack of volatility. Options trading needs volatility. So it's worth your time to look for those ETFs that you're comfortable with. But I would say have a group of ETFs that you're always watching or stocks that you're always watching so you know how they work, their price action, and what to expect with certain market conditions. Getting to know versus the types of swing trading that means you're screening for different types of stocks. I like to stick and get to know specific ETFs and stocks really well so I know how to trade them better. Because the thing is, buying your ETFs and your stocks at the end of the trading day, yes, you can make some nice trades and get some good prices at the end of the day, and that's helpful. But where you're going to make the real money is how you sell, how you exit the next morning. And if you do a good job and not make the big errors, which I'll talk about in a moment, you will maximize those gains, minimize those losses on a regular basis, and you will have a winning overnight swing trading strategy. It's important to have a plan and rules for your strategy. The number one thing that will tank your account is not following your rules, letting emotion take over. For example, I have a rule that allows me to stop out once. And if for some reason the IWM goes up a little bit more, but I think it's going to go down, I'll put a stop behind it. And if it stops out, I still have my general theory that it might still go down based on my indicators, so I may follow it up a little more and buy it again at a lower price, and then hopefully follow that put down. But maybe the IWM continues up, and I stop out again. I am out for the day. I lost a little bit more, but I took a risk. But there are some times where I forget my plan, and I just know that IWM is going to go down more, and I buy more. And I stop out, and I buy more, and I stop out, and I buy more, and I stop out. And the next thing I know, which kind of happened to me recently, about a month ago, I thought I was smarter than the market. And guess what? I had an initial loss of $15 because of the SPY-T trade protecting me and minimizing the loss. But by the time I was done with my buy and sell to outsmart the market, I was down $150. It's an overnight swing trade, so it's best to get in at the end of the trading day, get out in the morning, and move on with your day and not worry about what's happening in the market until it's time to buy again. We talk about using the up or down signal over at spytomorrow.com for our overnight swing trade signal, but you don't have to use that signal. You can use any signal you want. You can use put call ratios. You can develop your own signal. There's many ways to go about it. And you'll discover that there are other clues as to how confident you can be with that signal. For example, maybe high volume, during the day or the last hour of the day will support your signal in one direction or the other. Now, what we use are pressure readings, and these pressure readings help us decide if we're going to put a lot in the market, risk more or less. In other words, our position sizing. And our signal, the main one, which I'll show you in a moment, ranges from 0 to about 18. And it can go further, but I've never seen it go much further than that. And there's something really interesting about what happens at these different numbers. This rough grid here of 81 squares is really important. And let me explain why. As I mentioned a few times, the purple max I has had about 100 trades, and it's been successful 77% of the time. But there are times it's more successful than others. I've created quite a few different algorithms over the last 3.5, 4 years, and some have been more successful than others. Some have done really well for a period of time, but then they slowly faded or just outright broke, and I had to figure out what was wrong and what was not working, and I've continued to improve and learn with each generation of algorithms. And eventually, about a year ago, I developed what I refer to as the heart algorithm, and it was made up of really 81 small, simple algorithms that I had in my system. And they were the best ones, the ones that seemed to be more accurate at the time. And so I launched that one, and it did okay. It wasn't great, but it did show one thing. It kind of showed the pressure, the amount of pressure. And so, you know, one square, one algorithm will say plus, another will say minus, and then you have a few plus here, minus there, and ultimately you'll see this grid fill up with reds and greens, and then ultimately there are more pluses than minuses, or more minuses than pluses. And it can go from 0 to 16. I've seen it once as high as 18. But usually 0 to 16. I make sure it just stays positive no matter what. Whether it's negative or positive, I just always make it positive for us to understand the amount of pressure. And here's the thing. If it's a 0 to 6, the purple max I algorithm is correct 66% of the time. So better than 50, but only 66% of the time, compared to if it's up to 8 or 16 or 18. So if the pressure reading is a 8 or a 10 or a 12, it's going to be 87% correct. And that's important to know. So if you know that the pressure reading number at a 12 is usually correct, then you'll put more, you can risk a little bit more and have a higher chance of being correct. If you see a 2 or a 4, well, then maybe you want to pull back. If you see a 0, you may not want to even trade at all. Now, there are times that it's been a 16 and then the market changed the next morning, some sort of economic news that surprised the market or something like that. And it's probably a 16 because there was high anticipation. But when it's that high, well, then the market will probably flip really hard the opposite direction. That's quite often what happens. Not every time, but that's pretty common. It'll flip hard the other way. So with a SPY T trade, it's not that uncommon if we see that if we have a good trade such as a SPY TB trade, where if the market goes, or say the IWM or the QQQ goes more than a percentage the opposite direction, we're starting to make money in that opposite direction. So we learn how to read these numbers and what type of a trade we might want to use with those different numbers. And so the average is 77%, but 8 or above is 87%, and 8 or below is 66%. Here's something that's interesting that I wouldn't count on forever, but when it's an 8, it's currently 100% correct over about 16 trades. So it's getting significant. It's a percentage of those 100 times we had a pressure number. So I find that interesting, but of course that won't stay forever, but it's a nice number to play off of. As I mentioned, I have a number of algorithms, and the Purple Max I is working really well, and that's the one I share on the front page of SpyTomorrow.com. But I do have others that are not quite as accurate. They may be 66, 70, 73% accurate. However, if they're all in line, in other words, they all show positive or they all show negative, that's usually an indication there's a lot of pressure going on and they're all in sync. And of course, the average correctness when they're all in line is a lot higher. So it's beyond that 77%. It tends to be closer to 85, 90% correct at times, depending on the market. I'm always trying to improve these numbers, and I'm always trying different ways to measure the pressure. And I keep coming up with better and better ideas, and I share them with the community, and some win over the long term, but some fade away. We also have hourly pressure readings, which I don't necessarily like to trade off of alone because that pressure reading can change. But at the top of the hour and the bottom of the hour, I give a pressure reading that is often good to work with maybe another indicator during the day for those day traders, such as maybe the VWAP or moving average or money flow, whatever you want to combine that pressure reading with. I don't always use it alone. It can be very good, but I don't always use it alone. There are many ways to approach SPY-T trading. You can customize that overnight trade that works best for you. The one thing that ruins most traders, especially day traders, is emotion. And that's kind of why I like the overnight swing trade, the SPY-T trade, because there's nothing I can do after I buy my position at the end of the trading day. I have to wait. I can't mess it up. I can't sell early or stay in too long. I do exactly what my plan says. Sell the next morning and maybe use a few techniques to maximize gains, minimize losses, but there's nothing I can do until then. And so it's one trade, and then you move on with your day and you do it again the next day. So you don't measure it day by day. You measure it over a week, 5 trades over the week. How did you do? Maybe 20 trades over the month. How did you do, and what adjustments do you need to make? Here are a few common questions, and one is, what expiration date do you use for your options? Well, that depends on how aggressive you want to be. Obviously, the further out, the less aggressive you are. My sweet spot tends to be 4 to 7 days to expiration. But if it's over the weekend, I might look at 7 to 10 days. So if I'm more aggressive, I'm looking 3 to 4 days. If I'm not as aggressive, maybe I'm looking 2 weeks out to a month out, which will give you an opportunity to maybe trade further another few days if you want to hold on to those options, although that's not what this trading style is about. Another question is, do you have to trade options? And the answer is no. I mean, theta decay is a real thing and something you need to consider in the process. You can lose money overnight even if the trade doesn't go anywhere. It opens flat. You could still lose money due to theta. So other ways to go about it is to actually trade the stocks themselves or use, say, a leveraged ETF such as the SQQQ or TQQQ. That's another way to go about it. There are many ways to approach SPY-T trading, and this is your trading style for 2024. Again, it has 3 parts to it. The first part is the time component. You buy at the end of the trading day and you sell in the morning. And then, of course, the signal, and that's free on the front page of spytomorrow.com at 4 o'clock Eastern Standard Time, either up or down signal. If you want more deeper information, such as the confidence, pressure numbers, and so forth, and the other algorithms, you can become a member, but you don't have to be a member to do SPY-T trading. And you can use the third part, the ratio, to help to protect yourself, a 2-to-1 ratio, 3-to-1 ratio with your options in case the market mood changes by morning. I'll see you in the next video.